Hello all, this is Veeresh. You are watching Veeresh Academy YouTube channel. Welcome. Today we are going to discuss about a most important chapter for CA final for the upcoming attempt, that is foreign companies, or we will call that as a companies incorporated outside India, as provided in chapter 22 of the Companies Act 2013. This is not a revision lecture. This is a complete comprehensive coverage of this chapter, and you can follow this and you can use this, and material also available in the description. Material as well as question bank, which was covered till November 2021 questions. So all questions were available. You can download and use this material for the upcoming attempt. Now we will get on to this topic, foreign company. The chapter name itself is foreign company. So we have to understand the definition of a foreign company. What is a foreign company? So, before going to the foreign company, I will ask you a question. What is an Indian company? What is the Indian company definition? What is an Indian company definition? Company which is incorporated in India is an Indian company. Yeah. Any company which is incorporated in India under any legislation or any act is an Indian company. So, if I ask you the question now, what is a foreign company? Same reverse, vice versa case. Company which is not incorporated in India is a foreign company. So we derived one condition, you know, for a foreign company, that is incorporated outside India. The first condition for a foreign company, incorporated outside India. Second, so all companies which are incorporated outside India will automatically becomes foreign companies. So what is the use of including all the foreign companies? For example, a company incorporated in USA and doing business in France and Canada. Is there any relation to India? No relation. So why do we include in the definition, and why do we give some compliance burden to them unnecessarily? So they don't have any business connection with India. So that means they should be, it is not just incorporated outside India. The company should have a place of business in India or business connection. Business connection in the legal meaning is place of business in India. So second condition is place of business. So place of business is there, incorporated outside India. So can we call it as a foreign company? Almost yes, but there should be one more condition. That is, it is not just establishing place of business. They just establishing place. They are just establishing the place of business and not started any business. So what is the use of giving compliance burden to them by including all the provisions of Chapter 22 of this Act? So there should be some business activity conducted by that company, by that foreign company. So that means there should be a business activity. All these are and conditions, and that is consecutive conditions. You should be incorporated outside India, having a place of business in India, and you should conduct a business activity in India. This is about the foreign company. Now we'll see the what is the definition of a foreign company. Foreign company definition. As per section 2 subsection 42 of the Companies Act 2013, foreign company means a company which is incorporated outside India. We just now studied this, and it is incorporated outside India. Condition number 1. Condition number 2, which has a place of business in India, whether by itself or through an agent, physically or through an electronic mode. We will discuss in detail about this each and every word here. And this is consecutive and condition. Conducts any business activity in India in any other manner. Simple. Just revise, because why I'm more emphasizing this is because this is the most favorite question for the institute. It's almost asked around 6 to 7 times in the exam. So it's very important. What is a foreign company? First condition, company should be incorporated outside India. Second, it should have a place of business in India. And third, it should conduct a business activity in India. These three conditions are satisfied, then it's a foreign company. Otherwise, no. I will give you an example. Now, this is an exam question. A company was incorporated in Singapore, and 100% of the paid up share capital held by Indian citizens. Whether that is a foreign company or not. Think for a minute and answer. Over. So, how many of you say it's a foreign company? That is incorrect. It is not a foreign company. It has not complied with complied with all the three conditions. What are all the three conditions? Company should be incorporated outside India. Yes, it is. It is incorporated outside India. It was incorporated in Singapore. And company has a place of business in India. Did it have any place of business in India? No. Third, it should conduct a business activity in India. Whether Singapore company conducted a business activity in India? The answer is no. It is just a matter of Indian citizens having a paid up share, holding paid up share capital in Singapore-based company doesn't automatically make it as a foreign company or Indian company. So it is irrelevant. Okay. Let's move on to another important points in this definition. If you see the point number A, place of business in India. So, place of business in India, whether by itself or through an agent, even if they appoint an agent to collect the orders, to execute the orders, to provide the quotations, that becomes a business in India, and that person existence of that agent in India will makes that company as a foreign company under the definition provided in section 2 subsection 42. That is important here. Next, physically. Physically, anyhow, it's a straightforward case. If the company is having any branch office in India, then that company will become a foreign company. So, for example, if the company is having a share transfer office, foreign company is having a share transfer office in India, will that be a foreign company or not? The answer is yes, it's a foreign company. Having a share transfer office and having a shareholders in India can be considered as a commercial business activity, and having a business connection in India, thereby that company will also become a foreign company. And the last point is electronic mode. So or through an electronic mode. What is an electronic mode? So this is we are looking at these kind of businesses are developing day by day. Any person can sit in anywhere in the world and can order from any other country. The seller can sit anywhere and buyer can sit anywhere. They can do the business, right? So in this internet era, it is very important to include even electronic mode of business also under the eyes of law, for the compliance purpose. And if you see here, Registration of Foreign Companies Rules 2014 has defined the electronic mode of what are all the businesses will can be considered as a electronic mode of businesses. They have given a list here. This is very general in nature, very generic in nature. You can go through, and I have categorized here every business into business related, deposits related, operations marketing related, online services related. Okay. There is no need to read word by word here. You can just grasp the information. That is more than enough, because this definition is not an exhaustive definition. This is an inclusive definition. If you see here, including but not limited. So this business is dynamic, and more kind of businesses will be added here. Just go through once. And one of the important point here is that whether main server is installed in India or not. So if I read this here, according to the company's registration of foreign companies to 2014, electronic mode means carrying out electronically based whether main server is installed in India or not, including but not limited to all of the below. So person can do business from anywhere, and for example, server is located in France, and he is doing business from Canada, and doing business with whom? With India. Will that be a foreign company? Yes. So location of the server doesn't matter. Location of the server can be anywhere, because recently even in the direct tax, in the taxation also, there used to be cases like they will keep the server into the tax haven country, and they will do the business from somewhere else tax haven country, and they will do the business with India. They are evading the taxes. That is the reason why everywhere in the all the places, whether main server is installed in India or not, they still that can be considered as a foreign company, as far as it is doing a business with India. That is an important point. So just to give you more into this electronic mode, let us try to write something here. If I ask you, give me examples of electronic mode of business, what are the examples that you will give? Just to brainstorm, I'm asking this question. Tell me. I'm doing business using email. Sorry, my writing is you need to adjust with this. My writing is like this. Email. And second, Facebook. I can do business using Facebook as well. And what are the other things? I can create a website, and I can I can do business with it. Yes. What else? Telemarketing and tele shopping and medicine. You can order medicine as well. What else? So B2B transactions, business to business. B2C transactions, business to customer transactions. So all of these very general in nature, which are happening across the world day by day, every day. So these are the examples of electronic mode. Just go through once. So this is more than enough. Let's revise this foreign company definition. Foreign company definition is provided under Section 2, subsection 42 of the Act. And any company which is incorporated outside India, having a place of business in India, and doing a business activity in India, that becomes a foreign company. And whether it place of business can be through an agent, through physically, or through electronic mode as well. All this will be covered under the place of business. Now, so what it is, we all study well, we all do very well, but what is the problem with us is when we are doing the third revision or the day before the exam revision, we don't have time to read all the provisions. That is, students are losing marks there even though they did it very well in the first level of preparation. So that is the reason why what I did is I have provided here separately keywords for revision, like a definition. For example, if you want to revise this foreign company definition, just see these words: incorporated outside India, having place of business in India, and doing business activity in India. For example, if you see these words, you should able to recollect entire definition, especially on the day before the exam. These keywords for revision category will be very useful. That's the reason why I included in the material. Utilize it. Even the electronic mode also, server is installed in India. All of the important points I kept it here for a few important sections. And another thing is that post attempt questions. Post attempt questions refer question number 1 to 4 in the question bank. Question bank was also there. That is also provided with this material only, available in the description. You can download this. Question number 1 to 4 is about the definition of a foreign company. And I have provided clues also here, answers. We will solve one question from this, so that your concept will be very clear. you know the material will be like, first you study the provision, then you revise using the keywords, then you practice using this question bank. So every material that I'm going to provide, it has the same kind of flow. So it will be very useful, and you can provide the feedback in the comment section for this material. Okay, let us see this question number 2. Foreign company definition में question है. November 2018 it was asked. In the light of the Provisions of Companies Act 2013, explain whether the following companies can be considered as a foreign companies. A company which has no place of business in India, okay, it doesn't have place of business in India, yet is doing online business through telemarketing. So you tell me, whether it's a foreign company or not. The answer is yes, it's a foreign company. Telemarketing is also covered under the electronic mode of business, so it will be, this is a foreign company. Next, a company which is incorporated outside India employs agents but no place of business in India. Employs agents but no place of business in India. So what is this? This question is a little unique condition. This is first condition is what? For foreign company should be incorporated outside India. That is satisfied. Second, even agent is also considered as a place of business only. But no place of business in the question meaning is it has not conducted any business activity. It has not conducted any business activity. It followed passed first two conditions, and third condition is business activity. It was not yet started. So just having an agent and doesn't have any business activity, not even a single business activity in India, will not becomes a foreign company. Okay, business activity is also an important thing. So just employs an agent, that means company has not yet started any business in India. This is not a foreign company. Okay, and the third one, company incorporated outside India, having shareholders who are all Indian citizens. We have just discussed about this question. This is a trap. This is a trap from the institute. You will confuse by looking at this. Okay, all shareholders are Indians only. This may be Indian company. Like this, no. Company incorporated outside India and shareholders are Indian citizens. So shareholders are Indian citizens doesn't matter. The conditions were company should be incorporated outside India, having a place of business in India, and conduct business activity in India. First condition was satisfied, incorporated outside India, but remaining two conditions were not satisfied. That means this is not a foreign company. Okay, and let's see one more question. Then we can move on to another provision. Robertson Limited is a company registered in Thailand. Although it has no place of business established in India, yet it is doing online business through telemarketing in India. Whether this will be treated as a foreign company? Yes, we just covered this in this question as well. Yes, it's a foreign company. Online telemarketing also covered in electronic mode. This is a foreign company. Yeah, this is about the foreign company definition. I hope you understand this, and then we can move on to another section, that is section 379, application of this act to foreign companies. Now let us read section 379. Companies which falls under definition of section 2 subsection 42, that means company which is a foreign company, company which is a foreign company falls under definition means company which is a foreign company needs to comply with certain provisions. That means there are some additional compliance requirements were provided in section 379 to all foreign companies. First step is to qualify it as a foreign company. Once it is qualified, there are some provisions was already specified in chapter 20, chapter 22 of the Companies Act. In addition to that, if there is a if there is some criteria specified in section 379, if that conditions are followed, then all other provisions of the Companies Act will also be applicable to the foreign company. Okay, we'll see what is the criteria. Applicability of this section 379, where 50% or more of the company's paid up share capital, whether equity or preferred share capital, whether in full or in part, held by whom? Indian citizens, or one or more of the companies or body corporates incorporated in India, or a combination of both. If first, in any foreign company, paid up share capital in the capital structure, whether equity or preference share capital, held by Indian citizens or companies, or a combination of both, Indian citizens or Indian companies, or combination of both, then in addition to the compliance requirements provided in chapter 22 of the Companies Act, they have to comply with the all other provisions of the Companies Act 2013. And for that purpose, that foreign company will be considered as like an Indian company, and all the provisions which are applicable to the Indian companies will equally be applicable to the foreign company as well. That is the provision of section 379. Okay, let us see this provision in a table. First, criteria need to comply with 380 to 386 and section 390 to 390. That means I would say it is chapter 22. Column B is chapter 22, and need to comply with any additional other provisions of Companies Act. This is column 3. First condition: if the foreign company satisfy the above criteria meaning if it contains more than 50% is held by Indian citizens or Indian companies, or a combination of both. If it is a foreign company shareholding contains them as a shareholders, then in that case, whether they need to comply with section 380 to 386, 390 to 393, yes, because it's a foreign company. Anyhow, they have to comply with it. In addition to that, need to comply with other provisions of Companies Act, yes, because it meets the criteria. It contains more than 50% of paid up share capital held by the Indian citizens or Indian companies. Yes, in respect of its what? Not to the entire foreign company, only to the business it is conducted in India. In respect of its business in India, the foreign company specifically related to business in India, they have to comply all the provisions of the Companies Act. Second, company doesn't satisfy above criteria. That means either Indian companies, Indian citizen shareholding less than 50%, or they doesn't have any shareholding in that company. In that case, whether they need to comply chapter 22 as provided in section 380 to 386 and 390 to 393, yes, because it's a foreign company. Need to comply with other provisions of Companies Act? The answer is no, because they have not satisfied the criteria provided in section 379. Then third criteria, which is very, very important. If you understand this third criteria, that means you understand definition of foreign company as well as section 379 also. If company is not a foreign company, company is not even a foreign company also, but 50% of paid up share capital held by Indian citizens, 50% capital held by Indian citizens, but it is not a foreign company, then chapter 22 is applicable. The answer is no, because it is not even a foreign company. First, it should be a foreign company, right? To apply chapter 22. It is not a foreign company. Then these provisions are not applicable. Need to comply with other provisions of Companies Act. Then also the answer is no, because it has no place of business or a business activity in India, that is then it is not even becoming a foreign company. How come that needs to comply with the other provisions of the Companies Act? It is highly impractical, and there is no need for it. Having by see people can purchase from sitting in India, from purchase shares in any companies which are just incorporated outside India. So that doesn't mandate for the company comply with the Indian tax laws or Indian company law, right? So it need not contain follow the Indian compliance requirements. I hope you understand this table well, and I have given an important note also here. We just covered in that question and answers this point. Like I will just read out for you. If a company is not a foreign company, then none of the provisions of Chapter 22 and other provisions of Companies Act applicable to such company, even though the more than 50% of share capital held by Indian citizens are domestic company. We just covered it, right? We just covered it. We even covered in the definition of foreign company one of the question also. That's almost the same point. Again, I have given here keywords for revision. You can go through, utilize it, and post attempt question number 5 and question number 6 in the question bank. I won't go through each and every question here, because then this video will become a little longer. Let's see. Yeah, we'll see one question here. Mr. Jian is an Indian citizen, hold 25% of paid-up share capital of Lauren Stevel Limited, a company which has incorporated in Singapore with a paid-up capital of Singapore dollar 10 million. Swaraj Limited, a company registered in India, holds 30% of the paid-up share capital of Lauren Stevel. Lauren Stevel recently established a share transfer office at New Delhi. The company needs your advice as to what are the formalities company has to comply with. Now you tell me how to solve this question. This question contains two parts. First thing is whether this Lawrence Stivell is a foreign company or not. We need to decide that. First thing, what is the first condition? It should be incorporated outside India. It is incorporated in Singapore, so it is incorporated outside. Next, it should have a place of business in India. Whether it has a place of business in India, it has a share transfer office in New Delhi. That means it has a place of business in India. We already discussed this, so it's a foreign company. Part 2 of the question, whether it needs to comply with Section 379. That is the second question. That is the reason why they have given the shareholding to you. Gideon Indian citizen holds 25%, and another company, Swaraj Limited, holds 30%. 30 plus 25 is 55. So more than 50%. Then, apart from Chapter 22, it has to comply with the other provisions of Companies Act. And this Lawrence Stivell, for its business in India, it will be considered as an Indian company only, and all the provisions of Companies Act 2013 will be applicable to this company as well. That is the conclusion. Let's move on to another section. This is about section 379. Now we are moving on to section 380. 380. Documents, etc. to be delivered to registrar by foreign companies. Every foreign company, once it satisfies the condition, once it is having a business connection, once it is started its business activities, within 30 days of its having a business activity in India, or after establishing a place of business in India, it has to reach out to the registrar and give some information, basic information related to that company. And what are all the basic information, what are the documents, in which form they need to deliver those particular documents, all were provided in section 380 of the Companies Act. That is, we are going to read that. According to Section 380, subsection 1 of the Companies Act 2013, every foreign company shall, within 30 days of its establishment of its place of business in India, deliver to the registrar the following information. What are the information? The basic information. What information they will ask? You tell me. First, constitution of the related to constitution of the company. Constitution meaning what? Incorporation documents like memorandum of association, articles of association, and some the act under which the company was established, the relevant legislature copy. If it is not in English, the certified translation copy should also be submitted, because to understand, especially when these Japanese and Chinese companies, there should be a certified translation should be available, right? That's about the constitution of the company. This is one of the basic information. Second, where that foreign company was incorporated, that company's address. Suppose, for example, if it is doing business in India, but its original incorporation office is in, some USA, New Jersey. So the New Jersey address they need to provide it to the registrar. That is about the address. Next, place of business and place of business in India and history of place of business in India. What are all the place of businesses that they have in India? If it is one place of business in Delhi, one place of business in Kolkata and Hyderabad, so all these list of place of business they have to provide to the registrar. That is about the place of businesses. This is the basic information that they need to provide, and directors and other details. List of directors and other details. List of directors, secretaries, and who are all the associated with the foreign companies. They need to provide that basic information. Like, let me read this. List of directors and secretary of foreign company. Name and address of the authorized person in India who is authorized to accept the notices and documents on behalf of such foreign company. First, list of directors and secretary. Secretary means company secretary. List of directors. Who are all the first directors of the foreign company? That list they need to provide. In addition to that, there might be a chance that the directors mostly not residing in India. They are residing somewhere, the country of incorporation. So, what about the compliance requirement in India? If any of the authorities in India wants to issue any notice on the company, to whom they issue the notice? So they have to authorize a person who is available in India to receive and on behalf of such foreign company, who is the authorized representative of such foreign company. That name also they have to provide. Next. Declaration. Declaration is what? Whatever information provided above is true and correct, right? That and one more point is they are not debarred from formation of any company. So whatever this is just a normal application level declaration they need to provide. How to remember this? This is very general in nature. How to remember this? I created a code for this. CAP DD. CAP means hat. We use DD means demand draft. CAP DD. This is a simple to recollect during the exam. C means constitution of the company. A means address of the foreign company in the country of incorporation. P means place of business. D means directors and secretary and authorized person list. And last D, DD means last D, declaration of the directors of the company. CAP DD. Just try to remember this CAP DD. Practice this CAP DD code. Any other information as may prescribed. This is general point. Here now, in this cap DD में first D, it says list of directors and secretary. So list of directors and secretary they have asked. So what are all the things that we need to provide as part of list of directors and secretary? These are just the names we need to provide? No. So how they identify the individual with the name? So if I give it to any bank my name, how will they identify? They will ask us, you give me the basic information about you, like your Aadhaar number, passport number, PAN number, something you have to provide, right? The basic KYC information. For that reason, company rules has provided a list of information as part of formation of this foreign company. They have to give it to the registrar. Apart from the detailed names of the directors and secretary of the company, what are the basic KYC information they need to provide? First, if you see here, as part of the information related to directors, spelling mistake, directors and secretary, foreign company needs to provide particulars provided below. Think about basic KYC details. Don't try to mug up this. Very general in nature. You can write it on your own. Just like remember any application form that we are filled in our life. So all the contains these kind of basic information like name and surname, parents name, spouse name if he is married, and date of birth, nationality, residential address, passport number, PAN number, email ID, occupation, membership number in case of a secretary of that company, and other directorship if any held by him. So this is very basic KYC information that he needs to provide. That is about section 380. Can we revise section 380 again? According to section 380 subsection 1 of the Companies Act 2013, every foreign company which is has established a place of business in India within 30 days of its place of business in India need to provide some information to the registrar. What are the information? Information is CAP DD. CAP DD means C means constitution of the company, A means address of the company in the country of incorporation, and P means place of business in India and list of place of businesses in India. D means directors and secretaries details, and there is some basic KYC information that we need to provide. And last D is a declaration that above information is correct and they are not debarred from the formation of the company. That declaration they need to provide. That is about section 380. This question also asked multiple times in the examination. This is also important. As of now, this foreign company is a very small chapter. Each and every provision, each and every line is important. Don't leave anything. Okay. So now we discussed about what information that we need to provide, but how they provide the information. There should be some format. There should be some form available, right? That form is this form FC1. They have to provide all the information. Just now we discussed the cap DD information. They have to provide under form FC1, form FC1 along with the prescribed fee. So, for example, that foreign company is doing a business or involved in such kind of transactions where Reserve Bank of India under FEMA Act applicable. So they are withdrawing more money of the foreign exchange. They are utilizing more money of the foreign exchange, which is covers under the FEMA regulations. Then they need to take the approval from the RBI as well. That particular company. So before applying for the to the register along with this information, they have to provide this additional information that they have gotten approval from RBI. For example, if they don't need any approval, their money is withdrawing is within the limits, then they need to provide a declaration that they don't need to take any approval from the RBA. If amount doesn't crosses, then they need to provide a declaration. If amount crosses, then they need to provide an approval copy of the from the RBA. That is about, and along with the FC1 information, right? For example, after providing the information, there are some changes, there are some alterations in the address, place of business, the additional place of businesses were there, or address of the company in India was changed, and authorized representative has changed. Then they have to provide the revised information under FC2. Same. When there is a change within 30 days of the change, they have to provide this revised information to under FC2 along with the prescribed fee to the registrar. Then again, keywords for revision I have provided here. You can go through. And past attempt questions, question number 7 and 8. Can we see question? Let's see question number 8. So question number 8, the summary of this question is, there is a company in China, and all the documents related to the company was in Chinese local language, and that has to be filed before the ROC in Delhi. To file before the ROC in Delhi, it has to be in a English language. To get into the English language, there should be a translation. And if the translation happened, who needs to authenticate? Who needs to authenticate those translation document? That is the question. The translation is happening at Mumbai. That is in India. Translation is happening in India. And this question was asked in May 2018. And the fact is that this particular point was not covered in your study material. Not covered in study material, RTP, MTP, anywhere, but this question was came in the examination. So that's the reason why I included it as safer side. Authentication of translated copy as per Rule 10. This authentication is rules is provided in Rule 10 of the Registration of Foreign Company Rules. What this rule says, that those documents which are related to the constitution of the company, that MOA, AOA, has to be authenticated by an advocate or attorney who is entitled to appear in High Court. And that advocate or attorney needs to authenticate those documents. If advocate or attorney is not available, there is another option, that is an affidavit from a competent person. Who is that competent person? The person referred by the registrar, ROC referred. So particularly for this purpose, there is some list of service providers will be available with the ROC. So he can nominate one of the person. That person is having the knowledge of the particular Chinese language as well as the English language. So he will use his expertise and authenticate and read those documents, then authenticate. Then he will submit a affidavit in this behalf to the registrar. So this is how the authentication happens. And similar question was asked in July 21 as well. Here in this question, they said that this translation made at Mumbai. So what if they didn't say anything? That they need a translation, whether the translation happening abroad, not in India, or within India. So the question was not clear in the July 21 exam. So we have to write both the options. If it is authenticated in abroad, outside India, then who needs to authenticate? If it is happening in India, who needs to authenticate? If it is in India, we know the answer. If it is abroad, then we will see the answer now. Yeah, this is the question in July 2021. It was asked. Question number 11. So, what was there in question number 11? This is a German company, and they need a translation into English, and they have not said in in this particular question where the translation is happening, whether it is in India or abroad. So, if you see the point number C here, we can discuss the remaining points when we're discussing about a particular provision. How authentication of its financials is to be done. So, I have given an answer here. Authentication can be done in India or outside India. If it is outside India, then who needs to authenticate? The officials of that country. The officials of that country having custody of the original. So officials in the sense maybe the diplomats and the consulate officers and those officials who is having the custody of this original, and it's all depends on that particular country's local laws. Okay, officials of that country having custody of the original, and or if it is not available, then who needs to authenticate? A notary of that country where the company is incorporated. Where the company is incorporated, the particular notary of that particular country needs to authenticate these documents. That's about this rule 10. Now we will move on to the another provision. Accounts of foreign company, section 381. Section 381, accounts of the foreign company. So as like any other company, foreign company needs to file its financials with the ROC. And what are those financials? How the financials they need to prepare, and which format they need to prepare, which particulars they need to include. All those that was provided in the section 381. Now we'll read the section. Financial statements. Every foreign company shall prepare and file balance sheet and P&L, profit and loss statement, in such form, in having such particulars, such documents annexed are therewith. I will ask you a question here. What is the form and particulars an Indian company needs to file with the ROC? Schedule 3. Schedule 3 we need to follow. Similarly, foreign company also needs to follow Schedule 3. But with some exceptions, with some modifications, because it's a foreign company, all they may not able to comply with all the provisions specified in Schedule 3. So they can make necessary adjustments to their requirements, but they have to follow Schedule 3 here. The form and particulars as per Schedule 3. And what are the documents annexed or attached therewith? This is also same like what is applicable to the Indian company. It is same thing is applicable to the foreign company. Mutatis mutandis. We'll call in the legally with some exceptions, with some modifications as necessary, applicable to the foreign company as well. So what are the documents where these particular documents were specified in Companies Act? That is accounts of the company, chapter 9 of the Companies Act 2013. Okay. If you see the second point, second and third point mentioned the same. Financial statements are prepared by foreign company shall be prepared in Schedule 3 format as near as practicable thereto. All such documents specified in Chapter 9 of the Companies Act. Chapter 9 is what? Accounts of the companies. Section 128 to 138 of the Companies Act, equally applicable to the foreign company as well. In addition to this information, this financial statement, they have to file a consolidated financial statements of the company. CFS means that means the accounts of the foreign company also needs to be included. Whatever financials prepared by the country in the country of incorporation, those consolidated financials also to be filed with the ROC Delhi. Okay, I hope that is clear. Along with the financial statements, along with the financials information, every year foreign company needs to file some additional information also. What is that additional information? First, related to the place of business. During the year, foreign company may add new places of business and remove few places of business, and registrar needs to know and understand where are all these foreign companies having place of businesses in India. For that purpose, every year foreign company needs to file list of place of businesses in form FC3 as on the balance sheet date. Okay, list of all place of businesses. There is a two forms I mentioned here. FC1. FC1 we have already seen about the place of business, but that is applicable when the first time when the foreign company is established a place of business. That is the first time they have to provide the list of place of business in FC1. But repetitive FC3 is a repetitive nature. Every year they need to file this FC3. FC1 is only one time. FC3 is every year. That is the difference. Now last, other information. Just a minute. Yeah, other information. What are the other information they need to provide? So this is a foreign company. So foreign company might have some transactions with their holding company. So it is important for the registrar to know about those transactions, those related party transactions and transfer of funds between the holding company and its branch office or a subsidiary company. So it is very important to understand those. So what are the information that as part of other information, what information registrar will ask? First one is statement of related party transactions. Whatever related party transactions, they have to provide a statement annually every year. Second, repatriation of profits. If there is any repatriation of profits from this branch office to the holding company, that is statement related to that repatriation of profits. Transfer of funds. Is there any intercompany transactions like transfer of funds between this branch in India with another branch in another country or with the holding company? All those related funds transfer, they have to file a statement, and including dividends if any. Is there any dividend payment is there, that also needs to be, they have to find the related information. So this is all about how to remember these 3 points. I have provided a code here, that is RTP. R means related party transactions, T means transfer of funds, and P means repatriation of profits. You can remember RTP, then you can remember all these 3 points. Now, time limit. By when these are all needs to be filed? By when these are all needs to be filed? Within 6 months from the end of the financial year. This has to be filed in every calendar year within 6 months from the end of the financial year. So for example, financial year in India ends at, for example, 31st March. April, May, June, July, August, September. By 30th September, they have to file the financials. And if registrar, on some special circumstances, on an application made by the foreign company make an application to the registrar, he can extend this time period by maximum 3 months. So 6 months original timeline and 3 months additional, total 9 months. At any cost, they have to file their financial statement by 31st of December every year. Next, explanation related to the financial year. So we are talking about the foreign companies. It is not possible that every company will have the same financial year, that is 1st April to 31st March. Most of the companies outside India is having the calendar year as their financial year. So they have the calendar year as their financial year. Some companies is having, some countries is having a different year. Not, it is not just 1st April to 31st March. In these circumstances, how a foreign company will comply with this section 381 provisions? To comply with this provision, they have to maintain two sets of financials. One is for India filing, one is for the consolidation. They have to follow different financial years, so that becomes a compliance burden for them. In those circumstances, if the financial year is different, is other than the financial year as there in India, then foreign company can make an application to the central government. So if you can see here, usually financial year in 31st March of every year. However, on an application by the foreign company, central government, so on an application by the to the central government, so central government can give a relaxation to the foreign company that they can follow their own country's year as a financial year in India also. So they can all file all the information related to the India filings. They can use that year as a financial year. They need not follow 1st April to 31st March. That is all about here. And one important point here. Here they have mentioned central government, not ROC. ROC doesn't have the right for this relaxation. Only central government can do this. This is important point to remember. Don't mention here as a ROC. It is central government. Now the last one of this compliance requirement, that is annual return. Just like Indian companies, foreign companies also needs to file the annual return. What is the section for annual return? Section 92. Section 92. This was covered in, I think, in IPCC. Section 92. Section 92. What are all the information that we need to provide? List of companies, subsidiaries, and directors, and any changes in the KMPs. Some information related to shares and other information related to all the the basic information related to the company. We have to provide in under Section 92 of the Companies Act. And foreign company also needs to provide similar kind of information with some modifications, some changes they can do, because all the provisions may not applicable to them. Okay. And in case of foreign company, what are the timelines when they need to file this in annual return? They have to file this annual return within 60 days of last day of the financial year. Within 60 days of the last day of their financial year, which they are following, from that day, it is 60 days. They have to file this with the registrar. And which form they need to file? FC4. FC4 they need to file. Till now we shared about 4 forms. Let's revise them. FC1 is when the first time they are going for the registration. FC1 they have to provide all the information under section 380. FC2 if there is any alteration in the information provided in FC1, in FC2. FC3, so what is FC3? FC3 contains the list of place of businesses, and FC4 that is annual return of the company. These are 4 forms. And annual return contains such particulars as on the last date of financial year. Last date of financial year, whatever year they are following, that last day of the financial year, this contain all those relevant information. So that is all about the annual return. And here one important note is that wherever I am mentioning here the registrar, I am referring to ROC New Delhi, not to the particular state where that foreign company is having a place of business. I am referring to the ROC New Delhi only. This was also asked in the examination very recently. That's the reason why I given a here important note in this chapter. ROC means New Delhi. Wherever document information needs to be filed, that means it is ROC New Delhi, irrespective of the state where such foreign company is having a place of business. Important point to remember. Audit of accounts. Who needs to do the audit for Indian companies? It is chartered accountants, or a practicing firm of chartered accountants, or LLP. LLP can do the audit. Similarly, for a foreign company also, the same people, practicing chartered accountant or firm or LLP of practicing chartered accountants needs to do the audit of the foreign companies. For this, chapter 10 related to the audit of accounts from section 139 to 148 equally applicable to the foreign company as well, as like with some changes or modifications wherever necessary. And central government is having having a power to give some relaxation through a notification for any of the class or classes of the foreign companies. Now let us see one question based on this provision. Question number 11. Question number 11, we have just discussed this, this point number C, and we will discuss the remaining points here. The question is that there is a foreign company, and the foreign company is a German origin, and it is having a place of business in India, and it has to file few documents with the ROC. In that respect, they have asked a few questions to you. What are those questions? Submission of financials in German language, whether it is allowed or not. We just discussed that if the original documents, financials, were not in the English language, it has to be translated to English language. That has to be authenticated. So the certified translation copy in English to be filed with the ROC New Delhi. So submission of the financials in German language is not allowed. Next question. Format of financial statement as per IFRS. See, IFRS is an accounting standard. So IFRS is an accounting standard they have to follow while preparing the financial statements. And the format, when we are talking about the format, it is Schedule 3. They have to follow Schedule 3 and prepare the financials as per the accounting standards, applicable accounting standards, right? That is the answer. And third one, authentication of its financials is to be done. Authentication in India, by whom? Outside India, by whom? We have already discussed. So I'm not again repeating that. And point number D, whether the documents can be submitted to ROC Mumbai? No, we just discussed. ROC means it's always ROC New Delhi. The document should not be submitted. Even the place of business in the particular state, document has to be submitted with the ROC New Delhi only. Yeah, it was asked in July 21, so it is important. Very recently tested. We'll move on to the next provision. Now we are in the miscellaneous area, and display of name, etc. So 382, 383, 384 and 385 are single line provisions. There is nothing much in this, so we can quickly go through these provisions. And again, from 385 onwards, like related to prospectus and IDR, we will discuss in detail. Okay, section 382. Section 382 is disclosing of the name of the display of the name of this foreign company. Name of the foreign company. Everywhere, wherever the place of business was located of this foreign company, they have to disclose the name of the foreign company, country of incorporation, and liability of members is limited. These three things they have to disclose every place of business. And next. And one of the local language also they have to one is in the English letters, another one is a local language. Their name of the company they have to disclose not only at the outside of the place of business, and they have to disclose the same thing on the business letters and letterheads also. Wherever they are officially presenting some information, they have to disclose all these things. Next, question number 12 was there in the question bank. You can go through. It's a direct question. And I'm moving on to section 383. Section 383 is serving of documents on the foreign company. We already know that there is one person who is actually authorized representative of the foreign company should be available in India. Name of that person also we have to provide at the time of registration itself to the registrar. So if registrar wants to serve any notice on the company, they will serve to the particular person, the particular authorized representative of the company. The delivery of the document can be by hand delivery or by post or by electronic mode also possible. Okay, that is about section 383. Then section 384. Section 384 is a very general provision. It says that wherever the foreign company also needs to comply with a few provisions of the Companies Act. Just now we have discussed about, for example, annual return. Annual return also they need to file just like Indian companies with some modifications, some changes as necessary. Similarly, there are other provisions also, like for example, section 71. Section 71 is related to debentures. So debentures also they need to comply with the provisions related to debentures. And section 92 we have already discussed. And CSR is applicable to the foreign company as well. And books of accounts this is also we have discussed it. This is also applicable to the foreign company as well. They have to also retain their books of accounts for some particular point in time. That is all provided in section 148. And section 77 to 87 provisions related to registration of charges, this is also applicable. Section and inspection, inquiry and investigation, this is also applicable. So these provisions will be equally applicable to the foreign company also, with some changes and modifications wherever necessary. And section 385, fee for registration of documents. Wherever there is a registration of document is required, there will be some prescribed fee was there. Every foreign company needs to pay that fee as well along with the documents. That is about section 385. Till now we have discussed section 385. There are other provisions also in the foreign company, that is section 387 to section 393A, that we will discuss as part of part 2. I am uploading this entire foreign company chapter into two parts, part 1 and part 2. This is a part 1 video till here. I hope you enjoyed this video, and we will again meet in the part 2 video. I will upload this on the YouTube platform, and please provide the feedback to this video in the comment box. Please provide your comment and share this video with your friends, and like this video and subscribe to this channel for more information, and keep on providing more and more useful information for the upcoming attempt. And if you want to reach out to me, you have this many options are available. Facebook page is there, my website is there, and it is under construction. It will become live in within 1 week. And my WhatsApp number is also available. You can message me, and Telegram also available. You can message me there. I hope you enjoyed this video. I will upload in the part 2 video as well. All the best for your studies. Signing off. This is Veeresh. You are watching Veeru's Academy YouTube channel. Bye.